One of my favorite option strategies is to sell put options and run the wheel strategy. But here's the deal. Not every stock is a good fit for this strategy. In this video, I'm going to show you how to pick the winners and avoid traps and collect premium like a pro. Let's go. Hi, my name's Gotham. I'm a former finance executive turned options trader, and I'm here to help you escape the 9 to 5 grind like I did with the power of options trading. If you'd like a copy of my free ebook that covers my top option strategies to help you retire early, hit that like button, subscribe to my channel, and comment down below, and I'll respond to your comment with the ebook link. Also, don't forget to sign up for my free options newsletter, link in description below. So let's start by discussing what's a put option. A put option is a contract that gives the buyer the right, but not the obligation, to sell an asset, which is the stock in this case, at a specific price, also known as the strike price, within a certain period until expiration. So it's a way for investors to profit from a potential decrease in the value of the underlying asset, which is going to be our options contract. And basically, you sell the put option and collect the premium with the expectation that the price of the stock will continue to remain above the sold strike price of your put option. That way, you can end up collecting 100% of the premium for that options contract. Now that we've discussed what a put option is, let's talk about the wheel strategy. The wheel strategy is an options trading strategy that involves selling cash secured put options, which is what we just discussed, selling put options. And they're called cash secured because they're collateralized by the cash in your brokerage account. The only difference is that when we sell put options here, we're selling them with the expectation that we're actually okay getting assigned at a discounted price. Meaning, if a stock is currently trading at $10 and we sell an $8 put option, we're actually okay taking assignment of that stock at $8. Once assigned, we go ahead and sell covered calls against that stock and get rid of it at a higher price. So in summary, the wheel strategy lets you profit three ways. First, by collecting premium by selling cash secured put options. Second, collecting additional premium by selling covered calls on the stock that you've just acquired at a discounted price. And finally, from the stock price appreciation once your shares are called away. So now that you have a good understanding of selling put options and the wheel strategy, let's talk about what I actually look for while choosing the stocks that I want to run the strategy on. So here are the four things that I look for when choosing the right stock to sell my put options and running the wheel strategy. First, and very obvious, you want to choose a stock that gives you a decent premium for taking the risk of running the wheel strategy and selling the put options. So I want to make sure that I'm handsomely compensated for taking the risk of blocking my collateral while running the wheel strategy or selling put options. Second, I like to choose a stock that has strong fundamentals and growth potential. Next, I like to run the strategy on a stock that I actually don't mind owning. And last but not least, you do not want to run the strategy on a meme stock that just offers great premiums, because if you're assigned that stock, you could be bag holding for a while. So now that you have a good understanding of my selection criteria for choosing the stocks to run the wheel strategy or selling put options, I'm going to go ahead and show you three stocks that I'm currently running the strategy on and why I chose them. So first up is Hims and Hers. And for those who don't know, Hims and Hers is actually a telehealth platform that connects consumers to licensed healthcare professionals in the United States, UK, and internationally. The company offers a range of curated prescription and non-prescription health and wellness products and services to its consumers, also provides prescription medication on recurring basis and ongoing care from healthcare providers and over-the-counter drug and service products, basically focusing on general wellness, sexual health, skincare, and hair care. It's currently trading at a PE ratio of 77, which is definitely high, but considering it's a growth company, it is normal for growth organizations to have that high PE ratio. Coming down to earnings per share, it has been beating or coming in line with expectations for the last 3 quarters. Revenue has been increasing steadily, and the Q1 2025 was the highest ever revenue reported of 586 million, with earnings of 69 million. If we look at analyst recommendations right here, we have a lot of holds, we have some buys and strong buys. Looking at price targets right here, it's definitely trading higher than the average price target of 44, but you have a high analyst price target of 85, so we definitely have some more room to go. Also considering the previous high that it's made, there's definitely some room towards the upside, but I'd be careful what strike I choose when selling the put options because the stock is making large moves every day. And I want to be comfortable with the price that I'm okay buying the stock. So now that we've seen the fundamentals, let's see how much money we can make selling put options on HIMS. So I have the May 16th options chain pulled up, which is about 9 days from today. So knowing that HIMS is a really volatile stock and makes big moves every day, I want to be careful and choose a strike price that I'd be comfortable owning the stock if assigned. So generally speaking, I like to sell put options within a delta of 15 to 20, meaning there's a 15% chance of assignment or a 20% chance of assignment. So again, given that HIMS is really volatile, I'm going to stick with the lower end of that range. So HIMS is currently at 50 to 53. And if I go with a 16 delta right here, that gives us $92 for the $44 strike price. So let's see what rate of return we're actually going to get. So 92 divided by 4400, which is what it's going to cost us in collateral to sell one put option, is actually a return of 2%. And if you times it 4 weeks, it gives you a return of 8% in just 1 month, which is phenomenal. My next selection is none other than Robinhood. And I've actually done a lot of videos on Robinhood recently and why I like it. I'm linking this video up here I did recently on Robinhood and why it's my top pick for 2025. If we look at the 5-year chart right here, it's a solid chart all the way. Just came out with its Q1 earnings recently and is actually jumping back up. So let's come down and look at some additional stats. Currently with a PE ratio of about 28, in line with the S&P 500, so fairly decent. Earnings per share looks solid. It's been beating or coming in line for the past 3 quarters. Revenue has been increasing steadily. In fact, the Q4 2024 was an awesome quarter with a 90% profit margin. Now, with the latest earnings, the profit margin did come down, but it's still pretty solid at 48%. If you look at the analyst recommendations, we have 21 analysts covering Robinhood, and we have 8 buys, we have 6 strong buys, and we have 7 holds. Looking at the price targets, it's currently trading at $49.99 with an average price target of 59 and a high price target of 105. So again, I think there's a lot of room towards the upside. And also with Robinhood coming out with banking later this year, I think there's definitely a lot of room to the upside. So now let's go over to Thinkorswim and see how much premium we can collect selling put options on Robinhood. I'm going out a week, actually about 9 days to the May 16th options chain. Robinhood is not as volatile as HIMS and hers, so I'm actually comfortable selling 18 or 20 delta on this one. I'm going to be okay with this 19 delta right here, which is going to give us $62. Let's do some math. So 62 divided by 45.50, which is what it's going to cost us for one options contract, is actually a return of 1% per week. So if we go ahead and do it times 4 weeks, that would give us a nice return of 5%, which is again in the range that I am comfortable selling put options. Initially, I said 2 to 4% is my target for the month. So this is a nice 5% return on my investment. Last but not least is none other than NVDA. Now, I know NVIDIA has been beat down lately because of the tariff news, but just this afternoon, the Trump administration announced that they're actually lifting the chip curb restrictions put by the previous administration. So that should help NVIDIA break the 110 to the 115 range and move higher. Looking at NVIDIA's fundamentals, it currently has a PE ratio of about 39. Earnings per share, it's been beating it consistently. Revenue has been increasing quarter over quarter. And analyst recommendations, solid greens here, buys and strong buys. Currently trading at 117 after that news came out, with an average price target of 163 and $220 on the high end. And let's see what we can collect selling put options on. So if I come to the NVIDIA options chain, and same as the previous selections, I'm going to go out to next Friday, which is May 16th. And again, because I'm very confident in NVIDIA and I like the stock a lot, I'm comfortable selling a 20 delta put option. Looking at the options chain, we don't have a 20 delta, we have a 19 or a 22 delta. I like this 110 strike price. It has a lot of open interest and volume, meaning the bid and ask is going to be very tight and it's going to be easy to get in and out of the contract. So if we go with the 110 contract, it's actually giving us $1.13 right now. So let's do some math. $1.13 times 100 shares is actually $113. divided by how much it's going to cost for one options contract, which is 110 times 100. And that gives us a return of 1% each week times 4 weeks. And that is a solid 4%. So again, the 4% makes it worthwhile for me to sell put options on a stock that I don't mind owning if assigned. So there you have it. That's how I choose the stocks that I like to run the wheel strategy on and sell put options. I hope you learned something useful in the video. If you did, hit that like button, subscribe to my channel, and comment down below with any questions or thoughts. I'll see you in the next one.